Imagine a single company controlling the very engine of the AI revolution. Nvidia holds this power. Its AI chips are the lifeblood of modern artificial intelligence, driving innovation and vast profits. This dominance is worth billions, shaping the future of technology itself. The GPUs are indispensable, the gold standard for training complex AI models. This isn't just about hardware. It's about market access, innovation speed, and ultimately, who dictates the next wave of technological advancement. This immense value, estimated at over $10 billion, creates a near monopoly. Startups and even tech giants find themselves reliant on Nvidia's supply chain, a precarious position in the fast-paced AI landscape. You might be wondering how one company achieved such a stronghold. It wasn't overnight. It's a story of strategic foresight, massive investment, and a deep understanding of computational needs. Nvidia's journey began long before AI became mainstream, focusing on graphics processing. This early groundwork in parallel processing laid the foundation for their AI dominance, a quiet revolution building for years. They saw the potential for GPUs beyond gaming, recognizing their power for scientific computing and complex data analysis. This foresight allowed them to build an unparalleled ecosystem of software and hardware. Today, their H100 GPU is the undisputed king, powering the most demanding AI tasks. The economics of this situation are stark. Access to this chip is crucial for any significant AI development, and this is where the fight truly begins. Startups, hungry for market share and innovation, are locked in a high-stakes battle. They need these chips to compete, but Nvidia's supply is limited. The market dynamics are intense. Nvidia commands premium prices, and their allocation strategies can make or break emerging companies. This creates a significant barrier to entry for new players. You're seeing a classic case of market concentration. While competition theoretically drives innovation, Nvidia's current position presents a unique challenge to that principle. It's a billion-dollar race. Consider the implications for your own understanding of technology. The hardware that powers AI directly influences its accessibility and development speed, affecting everything from consumer products to scientific breakthroughs. This concentration of power raises critical questions about market fairness. Are we seeing healthy competition, or is Nvidia's dominance stifling the next generation of AI innovators? The Antitrust Division of the US Department of Justice monitors such market dynamics closely. They watch for practices that could unfairly limit competition and harm consumers or other businesses. While Nvidia isn't accused of illegal monopolistic practices yet, their market share and pricing power are undeniable. The sheer scale of their AI chip business is unprecedented. Many smaller companies and even established tech giants are scrambling for access. They need Nvidia's hardware to develop their own AI models and services, creating a dependency. This dependency creates a fascinating economic dilemma. For startups, securing Nvidia chips is paramount, often dictating their development timelines and scaling potential. The cost is astronomical. A single high-end Nvidia GPU can cost tens of thousands of dollars, and a large AI model requires thousands of them. This is a massive capital expenditure. You can see how this creates an uneven playing field. Companies with deep pockets can afford the hardware, while promising startups might struggle to get the resources they need. This economic pressure forces startups to innovate not just in AI algorithms, but in hardware efficiency and alternative computing architectures. They are finding creative ways to compete. Some are exploring specialized AI chips, designing hardware optimized for specific tasks. Others are pushing the boundaries of software optimization to run models on less powerful hardware. The fight for market dominance isn't just about who has the best AI models, but who controls the underlying infrastructure. This battleground is where billions are truly won or lost. We've seen historical parallels. Think of the early days of computing or the microprocessor wars of the past. Concentration of power often sparks intense innovation and counter strategies. These startups are essentially waging economic warfare, trying to chip away at Nvidia's stronghold. They are the Davids in this Goliath-sized market battle, armed with ingenuity. Their strategy often involves finding niche applications where Nvidia's general-purpose GPUs might be overkill or too expensive. They target specific AI workloads demanding custom solutions. For example, certain AI inference tasks, which happen after a model is trained, might not require the immense power of an H100. Custom silicon can be far more efficient and cost-effective. This is where the market's adaptability shines. While Nvidia provides the foundational power, specialized solutions can emerge to challenge that dominance in specific segments. You can think of it as a chess match. Nvidia makes the powerful king's move, but the startups are looking for clever knight or bishop plays to outmaneuver them. Their success hinges on securing funding, developing proprietary technology, and forming strategic partnerships. It's a high-risk, high-reward environment. The economic consequences of these battles are significant. Successful startups can disrupt markets, leading to shifts in stock valuations, new industry standards, and increased competition. Conversely, failure means immense capital loss and potential market consolidation. The stakes are incredibly high for everyone involved in this AI race. The outcome of this competition will shape the future of AI accessibility. Will it remain a domain dominated by a few giants, or will a more diverse ecosystem emerge? It's a critical juncture for the tech industry. The decisions made today, the investments in hardware and software, will define the AI landscape for years to come. You are witnessing the birth of a new economic frontier. Understanding these market dynamics is key to grasping the future of technology and its impact on your life. We've seen how Nvidia built its empire, the reliance it creates, and the high cost of entry for competitors. This economic structure is what startups are actively fighting against. They are not just building AI models. They are challenging the very economic model that underpins AI development. It's a fight for market share and technological sovereignty. These companies are leveraging every advantage, from novel algorithms to efficient custom hardware designs. They aim to offer compelling alternatives, even if they can't match Nvidia's raw power. This competitive pressure is ultimately beneficial for the broader AI ecosystem. It pushes for more efficient solutions and wider accessibility, which you, as a user or developer, will benefit from. The battle for market dominance is far from over. It's a dynamic and evolving landscape, driven by innovation, capital, and the relentless pursuit of technological advancement. So if you're interested in the economics of tech warfare, the future of AI, and how startups are challenging the giants, stay tuned. The next phase of this $10 billion race is just beginning. The question remains, can these startups effectively chip away at Nvidia's $10 billion AI empire? Or will the GPU giant continue its reign unchallenged, dictating the terms of AI's future? The economics of this race are complex, driven by supply, demand, and the insatiable appetite for AI innovation is a testament to the disruptive power of startups. Understanding these market dynamics is crucial. It's not just about who has the best chips, but who controls the economic levers of the AI revolution. The startups fighting back are not just seeking profit, they're fighting for a more open and competitive AI future. Their success could redefine market dominance. And that's the core of the conflict. A struggle for control over the essential hardware that powers our increasingly intelligent world. This economic battleground is where the true future of AI will be forged. It's a story of innovation, investment, and the fight for market share. The economics of tech warfare are complex, but the outcome will shape the AI-driven world you live in. As these startups push boundaries, they challenge the established order, forcing innovation and potentially lowering costs for everyone. The race is on, and the $10 billion AI market is the ultimate prize for these challenges. Stay informed, because the future of technology is being decided in these patent wars and economic battles right now.